So if you want quick money, but you want to pay a ton of money for it, right? In other words, your interest rate's going to be high, your fees are going to be high. There are lenders out on the internet that are willing to help you.
Diving in, I mean, let's address the elephant in the room, right? If we want to take out a loan or to leverage the relationships at the bank to gain access to capital to build the business, I mean, let's be honest, nobody wants to go into debt, right?
No, that's not necessarily a great thing, right?
Yeah, but you hear all these things about leveraging debt and
it's necessity.
There's a healthy way to.
There really is a healthy way to approach debt.
So let's talk about that. What do we got?
Yeah, so you can look at debt from a few positions to where you need capital to start a business, and that's either to buy widgets, right? To buy.
Now, when you say widget, to me, I'm thinking of my app on a phone. What do you mean?
Some sort of equipment, right? Some sort of equipment, be it paintbrushes, be it the software, be it laptops, desktops, the 5K monitor, a new whammy pedal, whatever that may be, right? Whatever
the thing you need to do what you do.
The thing you need to do to do your job, right? Or you may need to hire people, right? If you're a baker and that's the way you do creative things, you're going to need people to work with you, to do other things, right? You're going to need boxes to put your cupcakes in. You're going to need this to do that. And, you may or may not have that money to start. Now, the question is, are you right-sizing your start, right? So, if you've got a good camera and you're let's say you're a wedding photographer and you've got a pretty good camera, it's not the latest technology, but it's pretty good. Are you going to go into debt because you want something or you need something, right? Do you go into debt because this is going to earn you more money, or it's going to produce a better product, and there's a dollar attached to that, right? Because
basically investment versus expense, right?
Investment versus expense, exactly. Sometimes you need 4 cameras for a shoot, and you've only got 3. The question is, do I rent the 4th camera or do I buy the 4th camera? Right? Well, if you're moving up to where you need 4 cameras on more and more shoots, then at some point you're going to decide to buy that 4th camera because the rental expense is eating into profits as a little more than buying the camera would, right? Also, things you need to think about is how often do these things turn over? In other words, I'm going to use camera as an example. My apologies. How often does a camera technology last, right?
Yeah,
when
before
does
you
the
got
next
to replace it,
generation?
update
Before you
it.
have to replace it, update it, before you're just way behind, right? Same with monitors, stuff like that.
Computers,
right?
especially.
If I'm borrowing 5 years on a 2-year camera, right? That's a bad investment. You might want to rent. But if I have to borrow money for paint or borrow money for canvas or borrow money for, again, I'm going to use the term widget, that thing that you need, right? Then you need it. You absolutely need it. And that's a little different than want. And it's more of an expense. This is just my cost of goods.
So if I am borrowing money and I decide to go that route, at some point there's a tipping point. I say, okay, I need to borrow. What types of loans are we looking at that are available? Okay,
so a couple types of loans. There's what's called a term loan or an installment loan. That's kind of like your car loan, right?
Okay.
You borrow $40,000, you pay back X number of dollars a month. That's static until the loan's paid off.
And that's called a term
loan or installment loan.
Yep.
And then you have a line of credit, right? To where you say, hey, I'm going to ask for $100,000 because I need $50,000 now, and I probably need another $50,000 in a few months, and I only want to go through this pain of applying for a loan once, right?
Yeah, and that's a whole other thing we can talk about.
A whole other thing we're going to talk about later. But there's a line of credit, and again, that's a little dangerous, right? Because it's not fixed, and you can draw off of it when you want. But the more you borrow against that line, the more you have to pay back, right? So, and then there's the third type of credit that's just really common is a credit card. And that is a sort of an entry-level credit for business. A lot of the big banks are going to push you to a card. That's why you see the Spark card and the Amex and those things.
Cashback, what's in your wallet, all that stuff.
Because it's the quickest and easiest way to decision for that. In other words, the application process is quicker, right? I put in my name and address. I put in, my social security number. I put in my business information. I click OK. I wait 10 seconds. I get an answer back, right? Within 7 to 10 business days, if I was accepted, I get the plastic and I'm good to go.
Is it faster for that just because, hey, there's more opportunity to earn off of you than the other things? Like I know like with the credit card, you're looking at maybe 20% interest over here, line of credit, maybe you got 4%. So I'm much more rather you be making me 20% than 4%.
That I can shut off the credit card pretty quick. Okay. Right? If you're late 2 months in a row, I shut that off.
Yep.
I'm not exposed to you as
the risk
any
management,
more than that.
I guess.
And from the bank's perspective, they can manage that risk a little better. They can manage those limits a little better. They can start you off small and take you up. Whereas like a line of credit is boom, flat amount. Now they can take that down due to bad credit, but it's a little easier on the card side.
Makes sense.
Yeah.
So I know one thing we've talked about before, which I'd love to touch on at this point, is it's not always best to go through just a bank loan. Right. Sometimes you've got access to other types of funds that may be exclusive to a piece of equipment or something else that you need. Can you talk a little bit about that?
Yeah, so I'm going to use your example if you don't mind.
Yeah.
You guys were looking to buy a piece of equipment, specifically a camera to go do a shoot. Because again, you guys were short a camera on a shoot. And you're like, hey, this shoot's coming up. We need to... Let's
it was
just
that whole rent versus own. And we're like, you know what? In our case, it makes more sense to own. Let's go.
Let's buy it. Let's get it done. Yep. So you went to your bank and they said, here's a 14-page application.
Yep.
You're like, wow, this is a second job. That's when your partner, Andy, picked up the phone and said, Dave, this is what you do. Help me out.
Yeah.
At that point, you've got alternatives. There's this thing called the internet, right?
Yeah, so I've heard of it.
All kinds of lenders out there on the internet. So if you want quick money, but you want to pay a ton of money for it, right? In other words, your interest rate's going to be high, your fees are going to be high. There are lenders out on the internet that are willing to help you. They more help themselves, but they will help you if you can't get loans from anywhere else. They're called lenders of last resort, right? But when you're looking at equipment specifically, whenever you're in doubt of how am I going to pay for this, there's always that page on the vendor's website, right? That says, hey, here are our finance partners. Yep. And it's going to be a series of just, people who know the industry, right? In your case, this company was based in Southern California because you're buying a nice camera, really cool camera. They're based in Southern California. Guess what's out there? All the movie companies, they know cameras, they know video equipment, yada, 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 right? They didn't ask you. They weren't the small business banker in, Yokesville, Texas going, well, what you going to do with a camera, boy?
Yeah.
Right? They knew they knew the value of the camera. They knew why you needed it, right? And they quickly set it up. And since they're partnered with the manufacturer, they actually organized the shipping for you. So you got the loan, you got the money. It was a 10-minute conversation. You gave some basic information, and you got the camera shipped all in one fell swoop.
Right.
Sometimes, again, that's not the cheapest option, but it's the best option.
And in our case, in that particular example, it was not the worst option by far. And what was most funny about it is that we got a call from the bank, I don't know, a week later or something, wanting to follow up with us about the loan for the camera. And we were like, actually, it just came in the mail. We're unboxing the camera right now. As a matter of fact, to another company.
It was beautiful. It was beautiful.
We were literally unboxing the camera.
And they just had a solution for you. They didn't have money for you. They were just, we've got this other avenue we can take.
100%.
And it's like, I'm all the way down the road, man. I'm at the finish line.
Yeah, and you called that a captive loan?
There's some, captive finance company is some of them. And it's usually when like Honda Finance or Hyundai Finance is a captive financer, right? Otherwise, it's a third party, could be a fintech.
Yep.
But depending on the product you're buying, they could finance it themselves or they could outsource it to a vendor.
This is going to sound, I don't know, bougie or whatever, but I just bought an auto mower for my house. I got tired of mowing the grass 3 hours, 4 hours a week. Bermuda, like, you got to cut it every 3 days, no more than every 7 days. I did the math. I'm like, I could save like 158 hours a year if I just bought this thing over here that actually runs for 5 years or more. And it'll pay. It did the math. So, okay, I can spend, $200 2-3 grand or whatever, this thing will cut my yard automatically. I can go spend more time with my family, do a side project for, a friend or whatever it is. Well, you're just thinking through creatively about it and go, hey, this is more than justifiable. Like I can enjoy more time with what matters most to me. Yeah. And the company had just, again, a solution that took care of it at 0% for 6 months or whatever.
If you qualify,
and it was no problem.
No, and there's opportunity cost when it comes to these loans, right? Because your bank is probably going to always be the cheapest money. And I say that the fees and the interest rate and such is always going to be lower when you go to your bank.
Yep.
The quick 5-minute decision at a Cabbage or On Deck or Captive Finance is probably going to cost you some more money. But what's the trade-off? Right? If you're already working 16 hours a day to start up a business, do you really want to take on a part-time job now to fill out this 14-page application? And if they layer in an SBA loan to it, it's now a 21-page application?
Yep.
Sometimes the answer to that is yes. Sometimes the answer to that is no, I'm willing to pay the extra money, get me my money quick, let me get my things that I need and move on. Because I'm not going to have this loan for the length that I signed up for, and I'm going to turn a 2-year loan into a 1-year loan. I know I can pay it back in that amount of time. So I'm not paying the full boat interest. I'm only paying some fees and then a little bit of interest. So I'm good. So do the math, just like you did for the mower, right? Yep. Is this going to be worth it down the road or not? And then make the wise decision. Because again, you never want to go into debt, but if you do, you want to do it wisely.